Coming up on Market to Market, NAFTA talks border on nasty ahead of round 5. Climate talks continue despite limited U.S. federal government involvement, and serving a slice of Americana in the land of Lincoln. Those stories and market analysis with Mark Gold next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, November 17 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The cost of the approaching Thanksgiving dinner will be the lowest since 2013. This year's decline in turkey and milk prices reduced the cost of the meal. While one expense lowers, another rises. Wholesale prices are up, reviving inflationary pressures. The Producer Price Index, which measures inflation forces before they reach the consumer, matched last month's gain with an uptick of 0.4%. Retail sales increased 0.2% in October, driven by the bullish-minded buyers of cars, furniture, and clothes. The construction of new homes climbed 13.7% last month as builders broke ground on more apartments and single-family structures. However, those doing business in Middle America are not as optimistic about the economy. Creighton University's Rural Main Street Index remained below growth neutral in the 10-state region dependent on agriculture and energy. The policy wonks took over round 5 of the North American Free Trade Agreement talks as top negotiators plan to view from the sidelines. The official work began Friday in Mexico, but behind the scenes back and forth was already underway midweek. David Miller reports.
According to Washington-based Politico, this round is expected to focus on textiles, labor, cross-border trade, and intellectual property rights. Agricultural issues will likely move to the back burner. Earlier in the week, Commerce Secretary Wilbur Ross told the Wall Street Journal's CEO Council, as one special interest group, say agriculture for example, gets nervous, they start screaming and yelling publicly. They start writing letters, soliciting the congresspeople, and then they start screaming and yelling in public. It just complicates the environment and frankly makes the negotiations harder. The road to the final round is expected to be a bumpy one. Negotiations are stalled over Trump administration demands. Among them are a restructuring of the dispute resolution process and increased use of U.S.-based parts and labor in automobile assembly. However, 70 House Republicans and Democrats voiced support for auto industry executives who oppose changes to the 23-year-old policy. A recent Pew Trust poll revealed nearly 2/3 of Americans of both political parties believe NAFTA is good for the United States. Few say Mexico or Canada benefit more from the agreement than the U.S., despite the opinion expressed by President Trump. In a survey conducted by the National Association of Business Economists, those who study the subject think the final outcome of the 7-month negotiations will make little if any difference or cause any harm to the U.S. economy. All the trading partners have agreed to complete negotiations by March of next year before midterm elections heat up in all 3 countries. For Market to Market, I'm David Miller.
Research presented in Texas this week cites the federal corn ethanol mandate as contributing to climate change. The work from the University of Wisconsin states that since 2007, more than 7 million acres of habitat were plowed under to make room for corn and soybean fields, releasing the equivalent carbon dioxide of 20 million new cars on the road. The land grab may have had something to do with the price of corn topping $7 in 2007 and again in 2011 and 2012. Soybean prices were in the teens those years as well. Decoding reasons for climate change is still under debate as world leaders continued the talks in Germany without the U.S. in attendance. John Torpy explains.
World leaders gathered in Bonn, Germany this week to talk about climate change and how to move forward without U.S. involvement. On her home turf, German Chancellor Angela Merkel was under pressure from environmental groups to stop burning coal to produce electricity. On Wednesday, Merkel stopped short of meeting those demands, saying tough discussions need to take place with pro-business political parties as her new government takes shape next week. She did acknowledge the burning of fossil fuels is the reason Germany will fail to meet lower greenhouse gas emission levels set for 2020. The highest profile Americans attending the talks were current California Governor Jerry Brown and former Governor Arnold Schwarzenegger. Governor Schwarzenegger called on environmental groups to focus attention on health care issues pertaining to climate change.
There's no Democratic air or Republican air. We all breathe the same air. There's no Democratic water or Republican water. We all drink the same water. So we should take politics out of the whole thing and do what is right.
Last spring, the Trump administration announced the U.S. would withdraw from the nearly two-year-old Paris Climate Accord. Walking away from the agreement leaves a promised funding shortfall of almost $3 billion, an amount allocated during the Obama administration. French President Emmanuel Macron stepped forward, stating his country would fill the monetary gap left by the United States.
President Trump has made clear
the top U.S. representative at the international climate talks reaffirmed President Trump's position to withdraw from the agreement, but left the door slightly ajar.
We remain open to the possibility of rejoining at a later date under terms more favorable to the American people.
For Market to Market, I'm John Torpy.
A sure sign of fall is the return of everything pumpkin flavored, from lattes to yogurt and even the Oreo. All have created a demand for the harvest time staple, the pumpkin. The fruit's new avenue for growth helped push sales over 1.6 billion pounds, worth more than $200 million. The gourd or squash debate is ongoing, but one thing is certain. Those growing it feel like they are mostly in a Norman Rockwell setting. Josh Bittner has our cover story.
Since returning to central Illinois during the farm crisis of the 1980s, John Ackerman has raised various commodities, specialty crops, and animals to keep his multi-generational operation afloat. But embracing his hometown's unique flavor is what's truly entwined his family name into local roots.
We've got 32 acres this year of hand-picked ornamental pumpkins, gourds, and squash. And we raise over 160 different varieties, too. This is the best crop I've ever had. We have red pumpkins, we have white pumpkins, we actually have blue pumpkins out here. This one is a red warty thing. That is honestly the name they gave this one.
Despite limited chemical safeguards to fend off pests and disease, Ackerman says his pumpkins thrived in this year's drought conditions, with timely rains delivering a bumper crop around Morton, Illinois.
We actually grow thousands of these every year. These come in all different shapes and colors. People decorate with these all the time.
Once again, iconic Ackerman Family Farm served up a vast array of seasonal gourds and squash, with a dash of farm life.
And when we give field trips, we try to let them interact with the animals. We allow them to feel the feathers on a chicken, the fur on a bunny, the fiber on an alpaca, the wool on a sheep, the hair on a goat. We've learned that not only are we selling a product, I mean, we're selling produce out here, but we're selling experience too.
Commercial pumpkin patches are a classic set piece of harvest time Americana. And though Morton, Illinois has earned the nickname Pumpkin Capital of the World, it isn't the traditional jack-o'-lantern style that's globetrotting.
Got to give them a lot of credit. When they took that old wonderful Dickinson pie pumpkin, that was grown in Kentucky 100 years ago, they developed that seed and they improved on that pumpkin, and they did so by paying attention to taste and texture.
Ackerman began his career in pumpkinry by contracting with a local processor, Libby's, which cans pumpkin pie filler. Their Morton factory has been in operation since the late 1920s. And officials with multinational parent corporation Nestle say 85% of worldwide canned pumpkin supply comes from within a 50-mile radius of the town, going from vine to vessel in less than 6 hours. Shelf supply surges annually during the traditional harvest to holidays baking season.
It is a different view to see acres and acres of pumpkins rolled into rows ready to be harvested.
John Ackerman's cousin, Jim, is agriculture manager for Nestle USA in Morton. He says roughly 20,000 vicinity acres are in production during any given year, adding another layer of beneficial crop rotation with this particular variety outside corn and soybeans.
This is a little sweeter and a little meatier, or puree's nicer. The jack-o'-lantern variety is for appearances. We're looking for a Brix factor or a sugar factor in these also that isn't in the ornamentals.
Despite shortfalls on crop protection elements and university-level studies into pumpkins, Jim Ackerman says there is no shortage of local contractors willing to work into the fold when approached.
Nestle's Libby's has been around for a lot of years, and hopefully we've treated the growers well. They keep coming back.
According to USDA, top pumpkin-producing states average a harvest of around 30,000 pounds per acre. In 2016, Illinois trended nearly 10,000 pounds per acre above the U.S. average. As the national leader, the land of Lincoln grows twice as many pumpkins as second-place California. Locals say that's pretty good.
It is pretty good.
Jeff Griffin heads up the Peoria Area Chamber of Commerce. Morton falls within the nearby city's metro area, and Griffin is quick to point out the economic benefits the specialty crop brings to the local economy.
The land is right for it here. The pumpkin industry in Illinois is a $12 million annual industry. Large employers locally, such as Nestle, Libby's, and Seneca Farms, in addition to all the smaller farms that contribute to the pumpkin production, and the tourism and the fun stuff that goes along with harvesting pumpkins.
For John Ackerman, the diversity pumpkins provide are a welcome respite from the volatility of more common row crops. And whether it's working with processors to fill store shelves or raising ornamentals on his own, he's always excited by the spirit fall harvest ushers into the area.
We have the best demographics here. We get grandparents and families and cooks and gardeners and animal lovers, and I have really come to appreciate that in a retail business, we have the best kind of customers there are.
All right, you guys are all set. Thanks so much. Have a great day.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Little News provided guidance to the traders on LaSalle Street as several commodities suffered from non-weather events and nearly complete harvests. For the week, December wheat lost 4 cents, while the nearby corn contract moved a penny lower. The soybean complex did have some export interest to prompt purchases as the January contract added 4 cents. January meal gained $3.40 per ton. March cotton increased 21 cents per hundredweight. Over in the dairy parlor, December Class 3 milk futures dropped again, this time by 33 cents. The livestock complex continued its steep fall as the December cattle contract weakened 207 and nearby feeders deteriorated $5.45. The December lean hog contract tumbled 317. The U.S. dollar index fell 70 points. January crude oil lost 27 cents per barrel. COMEX gold expanded $22.30 per ounce, and the Goldman Sachs Commodity Index shed 4 points to finish the week at 425.60. Here now to lend us his insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Nice to be back.
We're glad to have you, and in case you want to go over things again, you can download or listen to our Market Analysis and Market Plus podcasts online anytime at iptv.org/MTOM. Mark, one of the things we noticed as the week was progressing, we saw a sell-off accelerate in corn and soybeans, but wheat actually seemed to have a little bit of resilience post-Monday, Tuesday. Was that selling corn, buying wheat, spreading, or was there anything that actually got folks excited about the wheat market?
Well, I think the funds have been short incredibly big positions, 110,000 contracts short. So I think we saw a little bit of buying as the dollar started to weaken a little bit off the highs. They came in and bought a little bit of corn, sold some beans and sold some corn against that. But I think when we look around the world and what's happening here in the U.S., we still have a couple of question marks about this year's crop, finishing getting it in, and where we stand and the condition of that crop. We had the bump in ratings. We backed off a point this week, and things between Texas, Oklahoma, into the Dakotas isn't quite perfect out here. So I think we're seeing a little bit of support on a little what-if kind of scenario.
We're seeing support, but it is still down here at historically cheap levels. I mean, recent history cheap levels, and still not a whole lot of incentive for that to really make a run back towards $5 in the Chicago.
Well, when you look at the world carryouts and you look at the Russian wheat getting sold into Egypt at really cheap prices, even less this week than the previous week, you've got to be thinking what's going to change all this. And it can turn on a dime, but we need to work on these carryouts. But the good news is, I think American farmers, the burning question is, have we made a low after Friday's action when we saw the barley in wheat, corn, and beans, 20 cents in beans, 6 cents in corn, nickel 6 cents in wheat? Have we made the bottoms? I think it's a little too early. I think we're all looking for something optimistic considering the report a week and a half ago showed such big carryouts.
Yeah.
We're looking for something positive. But this was good technical action. We were able to rally the beans to almost, we're within a dime of where we were before the report. Corn's within 5 cents. So that's all positive, and hopefully we can see that hopefully the lows are in. I don't think I'm quite ready to say that the lows are in.
Okay.
But at least we have something positive and know these markets can change. The funds are short 210,000 contracts of corn.
Now, that's the question. I mean, after Friday's action, I mean, that was a big move given the relative staidness of the corn market. 6 cents, is that going to be enough come Monday to get some of these funds to start bailing out of their short positions?
I think it's going to be critical to see what happens on Monday. If we can start, we haven't had 2 days, particularly, we've had some strong Fridays and good closes on Fridays, and we haven't been able to maintain it on Mondays. So if we could get off the week to a good start, close it high, open it higher for the week, get things going with the length of these funds short positions, I can't believe they're going to want to sit here after harvest and hope to get grain in at cheaper prices.
All right, well, speaking of post-harvest and guys who sold grain at perhaps cheaper prices, we've got a question here from Dan in Prairie City. He sent this to us on Twitter. We encourage all of you to find us on any social media platform. Dan's on Twitter at DanDV3. He wants to know, should I re-own March or July corn futures on bushels that I sold at harvest lows, and why? Is it worth making that gamble yet?
Well, I would buy some call options.
Okay.
Whenever you're selling any commodity on these kind of relatively, not historic lows, but in the last 10-year lows, you want to re-own it. You just don't want to throw in the towel and say, I'm done with it. Is it worth in corn spending 10 to 12 cents to try to stay long in these markets? In my opinion, it is. I think we got a little more incentive here. Before the report, we bought some call options for some grain that we had sold. Okay, those calls didn't work out at this moment, but they still have plenty. We've got 4 months left.
You bet.
So,
would you look at the July then as well, or would you stick with the March if you're just using options?
Well, obviously the farther out you go, the more expensive it's going to be, but you may only have to make one trade and not have to roll things. But I would think that the Marches are pretty cheap. Okay. All of the call options, because of the low volatility, are incredibly cheap. So whatever option you're buying in here today, either puts or calls, are relatively cheap because of the low volatility. Okay. So I would certainly say, March, May, July, any of those three, find something you're comfortable with at a price you can afford and re-own it, certainly with the call options.
All right, well, let's talk about soybeans. 18, almost 20-cent rally to finish the week out. Was that leftover excitement from the export report on Thursday, or was it just technical?
Well, I think it was technical. We crossed the 10, the 50, and the 200-day moving averages. And as soon as we did that, the funds kicked in and up we went. And we haven't seen that kind of buying in quite some time. Yeah. Now the funds, I'm guessing yesterday they came in along about 35,000 contracts of beans. They certainly added to that today. The interesting thing was the crude oil had a $1.25 rally, but the bean oil finished maybe a tick higher on the day. it was led by the meal, which we like to see.
Yeah.
And why would the meal lead this rally up? It's hard to say. The news was actually a little bit friendly for the bean oil market, in that the crushers are finding they're needing more beans to get that oil out of it.
Huh.
So you would think that the oil could be a little bit stronger here, but what we've seen was the meal, and it's always a good sign for the bean market when the meal leads the way up.
All right, so we could have some more excitement in this next week if meal continues in the driver's seat.
And let's hope we start off Friday on a good note and see more buying out here.
Perfect. Well, now let's take a look at the livestock markets. It did not have as exciting a Friday as the grains did. No. We saw, I mean, that sell-off just happened all week long in live cattle. Yeah. Saw live trade coming in at 119, 120. Yep. Mark, are we putting in a seasonal low here?
Well, let's hope so. We're certainly in the cattle cycle, building more herds, more cattle coming in, and the placement number on Friday was 110, a little bit higher than what people were thinking it was going to be. The funds are still long. The funds have built a long, despite all these negative reports that we've had in the cattle market, the funds continue to build long positions. They're still long about 120,000 contracts of cattle in here, which tells me we could see some downward pressure. Now, what's been the pattern is we get a bearish report, we open it lower Monday, and the rest of the week we build it all back again. So are we going to see the funds try to defend their positions in here? You know, they've got a lot more money than I do. I don't know, what really pulls their trigger, but if they want out, we can see some lower prices.
There's some risk in that market given
Absolutely.
the very long position.
Yep.
Now, you mentioned placements at 110. We saw marketings at 106.
Yep.
And total inventory at 107.
I think it was 108 and 106.
Okay, so 108. Generally, placement number, a little more than folks expected. Yeah. How nervous does that make you for the deferred months, the first quarter 2018 cattle?
It does make me nervous. And when you look at these prices historically, feeder cattle, fat cattle, they're still pretty good. And we've come such a long way in the last 6-8 months and put on a lot of pricing here. And what's been interesting is the funds have done this despite the fundamentals being bearish. So when we look at a grain market, the fundamentals are still bearish, but could the funds come in anyway? You bet they could. So again, do I want to re-own call options for grain that we've sold out here to keep this upside open? Absolutely.
Yeah. Do calls make as much sense, or options at all? I suppose a put makes a little more sense than livestock. Yeah. Do any of them make sense in here given the fundamentals and the strange positioning of the funds?
Absolutely. Particularly, I like the corn, I like the wheat options, call options on both of those if you sold the grain. Mm-hmm. I think what guys have to kind of look at two different markets here. We've got 17 at the lows, maybe bouncing out here. If you've sold the grain, re-own some calls. But you've got to start looking at 2018, because Lord knows that if we grow another big crop on top of what we've got out there, we've got some serious problems in agriculture next year. So guys need to be looking at buying some puts. We've got December corn up around 385. Look to buy some, you can buy some relatively cheap December puts out there. Spend 12, 15 cents is kind of your...
For 370, you have a floor.
Floor, which is higher than the prices are today, and not have to worry about, could this thing get really ugly?
Now, given that, I mean, we have seen corn corn at 340, D's corn today. Yeah. You know, the feeder cattle guy has to be pretty excited. Is there still some room to run in feeder cattle given the placement number that we saw on Friday?
It depends on what these funds want to do. They're still long. They're still long.
They've got the same position in feeders as they do in
It's obviously much smaller. It's a much smaller market. But, you know, it's funny. Guys will sit there and watch a feeder cattle market go down the limit at 450. And it's a bad day, but they don't really think too much of it. But they won't spend $550 to buy that put to protect it for whatever else is coming out here. So we like guys to be proactive in this marketing.
All right. Now, lean hogs, that's one of those things. We've seen new plants come online. We've got a lot more processing capacity now in this country. Yeah. Does that give you some reasons to be excited about hogs as we work through the final parts of the fourth quarter?
Well, we've gotten the summer hogs up to 84, 85 cents. We've backed off a little bit here. Historically, it's very tough to get hogs over 90. The only 1 year where we really did it and blew through it was when we had the PED virus and we had the big scares and things got crazy. But these are historically, when you look at it, except for the one year, these aren't bad prices to be protecting out here, because we still know that 60-cent hogs or 50-cent hogs could be out there.
You bet. You bet. So get aggressive, especially as you mentioned, look out to the summer.
Absolutely.
Where those prices are available.
Absolutely.
All right. Well, Mark Gold, thank you so much for taking the time to talk to us. We always appreciate your insight.
Thanks for having me back.
You betcha. Now, that wraps up the broadcast portion of Market to Market. However, as I mentioned earlier, we will keep the conversation going, including answering more of your questions during Market Plus, which is available in podcast and on video form on our website. So search us out on social media. And in fact, our Facebook page of IPTV Market is ready for the liking. Visit it today to find pictures, polls, and of course, chances for you to comment on our posts. Join us again next week as we look at 2 initiatives aimed at keeping food waste out of the landfill. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.